Welcome to today's edition of the Statler Financial Radio Show. Your financial security is our business. Have a question for the team? Call today, 863-877-1188. That's 863-877-1188.
Retirement is supposed to be time to relax, and, financial mistakes, unfortunately, can make it a little stressful. Today, we're talking about some of the top retirement challenges and some ways to help avoid them. Welcome to the Statler Financial Radio Show. I'm Stephanie Griffin, and I'm joined today by Philip Statler, founder and president of the Statler Financial Services. Good morning, Philip. How are you today?
Good morning, Stephanie. Doing well today. It is great to be with you on the radio. And I think we've got some interesting stuff to talk about when it comes to avoiding some of those pitfalls that folks may not realize they're falling into.
Right. And I'm sure that sneaks up on people on occasion. So before we dive in, why do you think people make these kinds of errors, talking about financial mistakes in the first place?
Yeah, that's a great question. And I think a lot of it comes down to not having a clear plan or a clear picture or understanding how different financial decisions can impact their long-term goals. Things really change when we go from working to retired. Retirement is a big transition. I mean, it really is. And so it's easy to start to feel overwhelmed by all the moving parts, like taxes. People sometimes think they're going to get away from taxes, but they still seem to loom around. Investments and healthcare. Those are three big things that really start to impact people in retirement. And that's why working with a professional can make such a big difference. They can help you avoid some of these costly missteps and really keep you on track.
So what is the first mistake retirees should watch out for?
I think the first mistake is withdrawing from your savings without a plan. So think about it. Even if you saved a lot, taking random withdrawals can potentially deplete your nest egg faster than you think. Instead, we need to create a strategy for our income, for our withdrawals, so we know where that money's coming from, when it's going to come, and how long it's going to last. And that aligns with your income needs and your investment mix. And I think lastly, a financial professional can really help you determine a sustainable withdrawal rate to make your money last. Too often I see people taking out a little too much. And so there's a chance that they could run out of money. Sometimes I see people that are really conservative, not taking out enough money to really enjoy their retirement. So there's a balance there, Stephanie, that we need to make sure that we can kind of hit the mark with.
If you'd like a free visit with Philip Statler from Statler Financial, you can definitely text the word visit. You could do that by texting the word visit 863-877-1188. Did want to mention that number before we got more into the show, 863-877-1188. And Philip, what is something else retirees should avoid when talking about financial mistakes in retirement?
This one's pretty big. I see it happen way too often. People don't think, they just do, and they don't realize the consequences until it's too late. Taking out large withdrawals from your IRA or your 401k when the market's down. So listen, when you sell an investment during a market slump, you lock in those losses. And so, it helps to try to avoid this. And to do that, consider keeping 1 to 2 years of living expenses in cash. That way, you can ride out market downturns without touching your investments. The other thing, just a little caveat here, is that taking out large withdrawals, that's taxable, folks. And so sometimes it makes sense to divide those things up between a couple tax years, which is part of the planning process that we go through.
What about investing, Philip? Are there mistakes people make there?
Yeah, there are. I think a common mistake I see is people investing too conservatively a lot of times. And the other thing I see is people actually taking on too much risk. So there's kind of this balancing act again on where we need to be. And so while it can be a good idea to reduce our risk in retirement, pulling all the way out of the stock market entirely can hurt your portfolio's overall growth. Keeping somewhere between 30 to 60% of your portfolio in stocks, again, depending on your risk tolerance and how you react to the market. And a big part of it is how that 30 to 60% is invested too, right? That's a huge part of it. Can really help generate the income you're going to need down the road. And a financial advisor can help you find that right balance, because it is. You need a balance between those two things. And so that's really the key, I think, Stephanie. And folks out there, if you're worried about possibly pitfalls in your retirement plan, one of the best things that you can do is do something. Take action. And if you're listening right now and you've saved at least $250,000 or more for your retirement, here at Statler Financial, we can help you. There's a free, no obligation analysis, but things happen fast. Our calendar does fill up fast, especially, now, right? So give us a call, 863-877-1188. That's 863-877-1188. I'd love to spend 30 minutes with you on the phone to make sure that you are heading in the right direction. Again, that number is 863-877-1188.
And there's so many things in retirement, Philip. It's probably a wise decision to give you a call and talk to you about what is going on with their finances, what things look like for their retirement future. So if you're just joining us, we are talking about the top retirement mistakes that could drain your nest egg. Philip, what's another retirement challenge retirees should avoid?
Well, I think claiming your Social Security too early is a big one. I see this way too often. And unfortunately, Stephanie, this pitfall can't be reversed. Once you start taking that Social Security, you've kind of locked in to what that is. So again, we want to make sure that we do that and we understand what our options are and that we make the right decision, because again, once you make that decision, it permanently locks in everything for Social Security. I think waiting until full retirement age or even later can help folks maximize their benefit and reduce the strain on your savings. I know, you got to really have a plan in place to be able to do that. But I see people just retiring way too early for their economic circumstances.
Yeah, if you have questions about anything Philip is talking about, give him a call, 863-877-1188. That number again is 863-877-1188. Let's talk about healthcare a little bit. What mistakes are there that retirees make in healthcare?
Yeah, absolutely. I think not reviewing your Medicare plan choices each year is a common mistake. Medicare plans and drug formularies, they change every year. So it's important to review your options during that open enrollment period. You might find a plan that offers better coverage at a lower cost. And that would obviously help with our monthly outflow.
Is there anything else retirees should watch out for, Philip?
Well, I think not having enough cash on hand for emergencies is one thing. We need to keep a couple years living expenses. And I tell my clients, look, let's keep $25,000, $50,000 in savings just to make sure. It's easy to get a hold of if you need it. If the market's down, you can take money out of there instead of having to sell something. It's just a good rule of thumb for that time period. And again, it's about being prepared for the unexpected.
And, being prepared kind of seems like one of the best ways to set ourselves up for a confident retirement. It's always nice to think ahead. That's what we're trying to teach our kids, Philip, is to think ahead and look ahead and try to prepare yourselves for what's to come. What's one of the most important things to consider doing right now?
Well, again, I think take action. I think we need to take action now. But before I really kind of close out this section, I want to talk one thing. I want to talk a little bit about taxes and retirement, because so many people, the year they retire, they take a chunk of money out and they use it maybe to pay off bills. I mean, I had a client recently that retired And it was great. She was ready to retire, but she wanted to pay some things off. So she took like $60,000 out of her retirement account the same year that she retired. So she had like, 6-7 months worth of salary. And then she took out this extra 60 grand. Well, that really puts us in a higher tax bracket. And remember that, folks, there's other ways sometimes to skin that cat. Sometimes we take some this year and a little next year and get things paid off, maybe not quite as fast, but we keep ourselves in a lower tax bracket, which is crucial to saving money in retirement. So listen, folks, if you're listening right now and you've saved at least $250,000 or more for retirement, this is your chance to really take control of your financial future. Here's how we can help. We'll review your financial plan to help ensure that it really aligns with your plans for retirement, the latest tax laws, market trends, and your goals. We'll identify opportunities to save on taxes, grow your wealth, and help protect that legacy. And we'll give you confidence that you're on the right track for that retirement. Folks, there's no obligation. It's just a phone call. You and I on the phone, making sure that you're heading in the right direction. Give us a call at 863-877-1188 right now to schedule your 30-minute phone call. That number again, 863-877-1188. Folks, don't hesitate. Like I said, it's important to take action now. Pick up the phone, give us a call. We will get you on the schedule to make sure that you are going the right direction. One more time, the phone number, 863-877-1188.
And definitely don't want to wait to take control of your financial future. Give Philip a call. Philip and his team at 863-877-1188 today to reserve your free analysis. That's 863-877-1188. And the Statler Financial Radio Show will be right back. Turn your plans of yesterday into yes today. Don't wait another day for a routine checkup of your retirement plans. Call Statler Financial Services, 863-285-3815. That's 863-285-3815.
Surprise parties can be fun. Financial surprises, not so much, especially when you're retired, like finding out you owe more in taxes than you thought you would, or having to go back to work to make ends meet. Maybe you'll be okay, but why not double check just to be sure? Call Philip Statler at Statler Financial Services and schedule a no-cost retirement double check at 863-877-1188. Philip and his team have seen their fair share of surprises over the years and know how to help you avoid them. Call 863-877-1188 to schedule your no-cost retirement double check with Philip Statler at Statler Financial Services. Don't let a financial surprise derail your retirement dreams. Call 863-877-1188 now. That's 863-877-1188. You can also visit StatlerFinancial.com for more info. Advisory services are offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. Time to retire right. This is the Statler Financial Radio Show.
Welcome back to the Statler Financial Radio Show with founder and president Philip Statler. I'm Stephanie Griffin. Thank you so much for listening today. Market volatility isn't a question of if, but when. But here's the truth. With the right preparation, market corrections don't have to derail your financial future. Philip, let's get started with fundamentals. Why should every investor, regardless of their age or portfolio size, have a plan in place for market volatility before it happens?
Well, I think a couple of things. One is, I think you said it just a minute ago, it's not, if it happens, it's when it happens, because we know historically it's going to happen. We just don't know when. So a couple of things that we need to make sure that we are ready when it does happen. Emotional decisions during downturns can be wealth destroyers. We saw that in 2008, where people bailed when we call it capitulation. That's when everybody starts bailing out of the market instead of holding tight because they just can't stomach it anymore. So emotionally, you need to make sure that you've got that tied down. How much are you willing to hang in there? Corrections happen on a regular basis. Now, correction is when the market drops by 10% or more, but less than 20%. 20% or more, we start to call that a bear market. It's more than a correction. So they're going to happen on a regular basis. And so having a plan helps eliminate those panic-driven mistakes. And that's where having that retirement income plan in place, knowing where your income is going to come from, and making sure that it is a little bit more protected than the rest of your accounts goes a long way to helping you weather those storms. So preparation allows you to see opportunities too, not just the threats that come when the market declines.
And if you'd like to talk to Philip about your portfolio, you can do that by calling 863-877-1188. That's 863-877-1188. And yeah, we've seen it happen. We've all seen it happen. Investors who seem to have everything figured out suddenly make devastating mistakes when markets get rocky. So what are some of the most common and costly errors you see people make when they haven't properly prepared for market volatility?
Selling at the bottom to, quote, stop the bleeding. At that point, if you're at the bottom, you might as well ride it out. A caveat, right? As long as you've got a well-diversified portfolio. Now, if you're in all, penny stocks or something that's very, very risky, well, that's a different story. I'm talking about people that have a well-rounded, a well-balanced portfolio. Then those companies are good, solid companies. They're going to weather the storms like they have for years. So that's one. Moving everything to cash and missing the recovery. I got to tell you, I saw this last year. Stephanie, I had a client come in and say, look, I'm concerned about the election. I'm concerned about what's going to happen. I want to get out of the market. I want to go to cash.
Oh, wow.
I said, okay. So I let him think about it for a little while, and I gave him a couple other scenarios. Mm-hmm. Why don't we liquidate half and leave half invested? Well, he called me back and said, no, we talked about it. We just want to liquidate everything. Let's put it in money market. Let's see what happens with the election. And what happened? The election hit, markets bounce. And it's tough to get back in to the marketplace. So just an example of where we see it happen. Banning your diversification. Like I said earlier, all this relies on having diversification within your accounts. And that's a big deal. And then letting fear override your long-term strategy. The younger you are, the easier this is because you got a lot of time left. The closer you get to retirement, that's why we need to start making adjustments to what our accounts look like before we get to retirement. I would say 5 years before retirement, we need to start looking at those accounts and making adjustments so that we don't have too much risk in there for retirement time.
Well, some investors think they can actually wait until they see trouble coming and then make adjustments. I don't know about you, Philip, but I don't know how to time the market. And I know that's pretty difficult. So what makes it so challenging to predict when volatility will strike or when stocks will go higher? And why is waiting until it happens such a risky strategy?
Here's the deal. Nobody knows, what the market's an emotional machine. A lot of times it's emotion that drives the market. Yes, the traders out there, the people that do this for a living, they're looking at, either charts or technical analysis or fundamental analysis or all those things. But you can throw those things out the window when emotions hit. And so we don't know when the next thing's going to happen. Right. And just because the markets are down doesn't mean the stocks in your portfolio down. You may have stocks that are, counterproductive. They may go the other direction. So you just don't know. Just because the market's down doesn't mean your account's going down. I see that all the time. And so you just need that to make sure it comes down to those couple things, Stephanie, making sure that the risk in your portfolio overall matches up with the risk you can handle. And we saw this back in 2008, where people thought they were a moderate investor. Unfortunately, a moderate portfolio back then lost 15 to 20%. That was way more than the moderate investor thought they could lose. And so they figured out real quick they weren't really moderate investors. The problem is they found out too late. We want to find out ahead of time what kind of investor you are so that we can pick the right kind of portfolio. And that helps with that whole process.
You are listening to the Statler Financial Radio Show. You can go to his website, statlerfinancial.com, find out more about the services that they have, and you can also give them a call, 863-877-1188. Sit down with Philip, talk to him, have that free consultation, 863-877-1188. Now, Philip, you've helped a lot of clients prepare for and navigate through various market cycles. For someone watching who's thinking, I know I should prepare, but I don't know where to start, how do you help people build a comprehensive volatility preparation plan? That's a mouthful.
Well, that is a mouthful, and but it's a good point to make. And I guess really, Stephanie, it starts with understanding the amount of risk you can handle. And we've got a couple tools that we use here at Statler Financial to help us ascertain what that number is for you on a scale of 1 to 100. What does that look like for you? And so we plug that into our system and build our portfolios around that. And we can show you, look, based on your risk number, if we had another 2008, here's what it would look like for your portfolio versus what your current portfolio looks like. If another 2008 happens, here's what your current portfolio would look like. So sometimes that helps people understand what the differences are between different portfolios by, when we run those big booming situations, what could happen. And so that really helps them get a better picture of risk and how it affects their portfolio.
Since every investor has unique circumstances, risk tolerances, and goals, can you walk us through the kind of personalized volatility assessment you can provide for clients?
Absolutely. And that's really our core retirement design, Stephanie, is that process where we'll sit down with folks and make sure and actually run a risk analysis on their current portfolio to see, okay, what is the risk in that portfolio on a scale of 1 to 100? We run you through an analysis to determine what your risk score should be. And then we compare the two. If your risk number is a 52 and your current portfolio is at 75, well, there's a big mismatch there. And so we need to make sure that we get on the same page, that our portfolio and our risk tolerance are on the same page. And that's really what we strive to do here at Statler Financial.
Philip, can you walk us through the process at Statler Financial Services and tell us a little bit more about that?
Absolutely, Stephanie. So we start with a no obligation, a 30-minute phone call. That 30-minute phone call is really where you can ask us questions. We'll ask you questions. We want to see where you are and what your ultimate goals are. And if you're on the right path to get there, God bless you. We're going to let you know that, or we're going to encourage you to do a couple things and set you on your way. If I see a place where I think I can help you, I'm going to let you know that. Hey, look, I think that we could help here, or I think you're off track there. And then we would sit down together in the office and go over, or by Zoom. I can do Zoom meetings too. And we'll go over where you are and collect the data that we need, statements, tax returns, all those things to put together a financial plan for you. And by doing that, then our next step really is we get to work and we run the risk analysis on your current portfolios. We also then get what your risk assessment looks like. From there, We look at the fees and expenses you're paying inside of there. We move on to taxes. We prepare a tax plan and see, if there's any opportunity for you to be saving in the area of taxation. And when I say saving, I don't mean saving just for today, but I want to save you a lot of money over your retirement lifetime. And so sometimes, Stephanie, that means we pay a little bit more tax today and tomorrow in order to live tax-free the rest of our retirement. So that's the second leg of our planning process. The third leg is putting together that income plan, showing you where the income's going to come from, how we're going to get the income we need. And then the big number is, how much income do you have to spend? We'll come up with all of those things in the third leg of our core retirement design. So when you're done, you have a risk analysis, a tax analysis, and an income plan all put together for you, ready to go. And so that's really our core retirement design. Again, we want to help people have the retirement they always dreamed of. It's a simple phone call to get started. Give us a call at 863-877-1188. That's 863-877-1188 to schedule your 30-minute phone call. Or you can go to my website at statlerfinancial.com. There's a link there that you can click and schedule a time as well. I look forward to speaking to you soon.
And we will be right back, and we're going to be revealing specific strategies for building your volatility defense system and the critical mistakes that could leave you vulnerable when markets turn turbulent. The Statler Financial Radio Show will be right back.
Needing a second opinion on your retirement plan or to see if you're paying more than your fair share to Uncle Sam? Schedule your complimentary visit today. Text VISIT to 863-877-1188. That's VISIT to 863-877-1188.
Surprise parties can be fun. Financial surprises, not so much, especially when you're retired, like finding out you owe more in taxes than you thought you would, or having to go back to work to make ends meet. Maybe you'll be okay, but why not double check just to be sure? Call Philip Statler at Statler Financial Services and schedule a no-cost retirement double check at 863-877-1188. Philip and his team have seen their fair share of surprises over the years and know how to help you avoid them. Call 863-877-1188 to schedule your no-cost retirement double check with Philip Statler at Statler Financial Services. Don't let a financial surprise derail your retirement dreams. Call 863-877-1188 now. That's 863-877-1188. You can also visit statlerfinancial.com for more info. Advisory services are offered through Second Half Financial Partners, LLC, an SEC registered investment advisor.
Welcome back. It's the Statler Financial Radio Show. Let's get into the specific strategies that can help protect your portfolio and your sense of reassurance. Philip, what does a well-structured volatility defense system actually look like? It sounds so stealth or something, I don't know. And how can it help protect investors when markets become turbulent?
Well, I think one is, your core holdings need to kind of have some stability. So you've got a core portfolio that's going to kind of be the bread and butter that's going to be there, all the time. And then we have growth positions to help combat inflation. The one thing I know is as I talk to people all the time is, I don't want to be in the stock market. I'm going to tell you something. When I have 90-year-olds, that we have at least 10% of their portfolio is in the market. Why? Because it helps combat inflation. And we know inflation has been pretty bad here the last few years. And so this is one area that can help offset some of the inflation. And then having some protected income generation strategies. There are dividend portfolios that you can put together that would have some specific, allow you to throw off some specific amount of income. There are annuities out there that will give you an income stream for the rest of your life. And those can be beneficial. That way you don't have to worry about the ups and downs of the market. If they go down, it doesn't matter. Your income's not going to be affected. And then the last thing I think that people, I think they know they need to do it, but they want to retire early, so they don't care. And that is, folks, you need to optimize your Social Security benefits. You really need to do the math to figure out when is the best time for you to take Social Security. I understand if health is an issue and you need to retire at 62, but there's a lot of folks out there retiring at 62 or taking their Social Security at 62 and still working, that it is not a good idea to do that. And we need to look at why it's not a good idea. And we need to look at how can we do better and protect our spouse. And there's a lot of things that go into optimizing Social Security. It's not just the dollar amount that's there when you start drawing. And those are the things that we look at and talk about when we start talking about optimizing your Social Security benefits.
Now, there is a fascinating psychological component to market volatility. How can investors prepare themselves mentally and emotionally for the inevitable stress that comes along with the market downturns?
It's hard to really, kind of get that psychological component put together. Because so many people live in fear. And so when the market starts to drop, they fear creeps in and starts to really take effect, right? So I think if we look at a couple of things, one is understanding your true risk tolerance before the crisis hits. Like I said earlier, people in 2008 found out they were not moderate investors too late after their accounts were already down 15, 20%. And so understanding what your true risk tolerance is before a crisis hits is a huge deal. It really, truly affects how you should be investing your money. Other thing is maintain historical perspective on the market recoveries. I mean, if you look back, I can go back to 2000, right? One of the first major bear market I went through as an advisor. And what we have seen both in 2000 and 2008, if you had a well-balanced portfolio, well-diversified portfolio, it basically took you 4 to 6 years to get back to even. And so you need to have that perspective on market recoveries. Now, we've had some, right? The COVID bear market was a flash in the pan. It was down 30%. In 6 weeks, we were back to where we were. So it does happen that way. Corrections, we have a 20% or 10% correction, and within a couple weeks we can be back up. So markets recover, and then we need to have a written plan, because that will help us reduce the emotional decision making that we're trying to do. Having that written plan that we can go back and look at is a huge deal. And then bucket planning, putting your different accounts in buckets. This is the bucket I'm going to draw from day 1 retirement until day 10 of retirement. Then I'm going to go to this bucket. So having the bucket approach can really help us plan out how we're going to use the income, and lets us put part of it, that last bucket we're not going to touch. If it has ups and downs, it doesn't really matter, because we don't plan on using that bucket anyway, except for emergencies and to leave to our beneficiaries. So that's part of the planning process there.
You said bucket planning. I thought we were adding to our bucket list. That's that meant. All right, let's address something that keeps many investors up at night: the fear that this time the market won't recover the way it has historically. So, Philip, how can investors balance learning from history with preparing for unprecedented events?
Well, I think that one thing, we diversify beyond traditional assets. If we look at some of the other models out there, when it comes to endowments and those type of things, how do they invest their money? They use some non-traditional assets to help when the market gets a little rough. Stress testing. I mentioned this earlier. Stress testing for various scenarios, taking your current portfolio and looking at what would have happened in 2008 if I had this current portfolio right now. Gives you some sense of okay, I can handle that, or no, I can't. We need to make changes. A big thing is this, Stephanie, you need to focus on what you can control. Tax strategies, Social Security optimizations, diversification, and then maintain flexibility to adapt. That's huge. We got to be flexible to be able to make changes. All of this wrapped up is our core retirement design. I'd love to sit down with you, talk to you about it, see if we can help you develop the retirement plan that's going to give you that retirement you always dreamed of. Give me a call at 863-877-1188, 863-877-1188.
And you can also text VISIT to that same number and contact Philip at Statler Financial Services, 863-877-1188, and get in for your complimentary visit. Now, we've covered a lot of ground today about preparing for market volatility. For listeners who are realizing they may not be as prepared as they should be, what kind of comprehensive portfolio review process do you use to address volatility vulnerabilities?
That's a lot of V's in.
There's a lot.
Yes. Again, the first component of our core retirement design is really identifying and measuring the risk you have in your current portfolio. And that's going to give us, based on that number, we will know how volatile your portfolio could be. And so from there, we have kind of that view of here's what it looks like. Here's what it would look like in 2008. What do we want to do about it? Are you comfortable here? If not, here's some suggested changes we might want to make to make sure that we're okay on that front. It's planning. If you have a plan in place and the markets are going to go up and down, or maybe they go down and up, but they're going to be volatile. And if you're ready for that and you're mentally prepared for it, then you can weather those storms. And having that plan in place is a big part of it, Stephanie.
And, every investor situation is unique. We talk about that all the time on this show. So how can you create a customized volatility preparation strategies that align with each client's specific circumstances?
You're right. Everybody comes in with a different set of assets. They all have different goals. They have different concerns about what volatility looks like in their life. And so it is, again, and I feel like a broken record sometimes. It's putting together that plan, having that plan in place that will, really allow you to invest properly, understanding the amount of risk that you need to have in your portfolio to grow, but yet the amount of risk you need to be comfortable with. And I think that's really the bottom line is getting folks comfortable with the risk. And some people honestly never get comfortable with the risk. I can't tell you, I've got several clients that will say, I don't like the market. I know you do. I don't really necessarily like the market, but it's a tool that we need to use. And they trust that we are doing what's in their best interests, which is why we're meeting with them, why we're making changes to portfolios and making sure that they're in the best possible position they can be in. And that's all part of the process. You have to meet with people. You have to assess their fears, walk them through it so they understand where they are, and let them ask questions. And the questions they ask are huge, and being able to educate them on why it's important, it is a big part of what we do. And it's part of what we like to do, is we want our clients educated about why they are in what they're in, why we're using these tools in these certain ways to get them to where they need to be. And that's what it's all about, helping people be comfortable in retirement. I'd love to help you. Give us a call at 863-877-1188. That's 863-877-1188.
And that's what I love about you at Statler Financial, Philip. You let people go in, you talk to them, you don't talk at them, you help them understand, and if they have questions, you are happy to answer them. So please give him a call, for a sit down, a free consultation, 863-877-1188. And the Statler Financial Radio Show will be right back.
Surprise parties can be fun. Financial surprises, not so much, especially when you're retired, like finding out you owe more in taxes than you thought you would, or having to go back to work to make ends meet. Maybe you'll be okay, but why not double check just to be sure? Call Philip Statler at Statler Financial Services and schedule a no-cost retirement double check at 863-877-1188. Philip and his team have seen their fair share of surprises over the years and know how to help you avoid them. Call 863-877-1188 to schedule your no-cost retirement double check with Philip Statler at Statler Financial Services. Don't let a financial surprise derail your retirement dreams. Call 863-877-1188 now. That's 863-877-1188. You can also visit StatlerFinancial.com for more info. Advisory services are offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor.
Welcome back to the Statler Financial Radio Show with founder and president Philip Statler. Give Philip a call at 863-877-1188. You can also go online, find out about Philip and his team. You could go online to StatlerFinancial.com. Now it is time to dive into our mailbag questions. That term, Philip, seems a little outdated, don't you think? Mailbag?
Yeah. Now stuff comes via, email.
Right. Maybe email questions. There we go. Oh, my goodness. All right. Well, it is time then. We're going to open our Statler Financial mailbag and go over some common retirement questions now. Our first question today, Philip, is from Ruth in Avon Park. I've been worrying about long-term care coverage. Is insurance the best bet, or should I be looking at other options? Very nice question.
Well, that's a good question. And it becomes one of the things that's top of mind for a lot of folks, especially if they've been dealing with a family member that's just gone through that. And so it's a hard question to answer, Ruth, because there are options and it really depends on your financial circumstances, right? I think it's an area that people need to definitely look at. They should at least price it out, see what it looks like for their circumstances. But here's what I would say. Don't buy a policy that lags on benefits, that is short term, because typically you're paying for something you won't get much benefit out of. So one thing I would caution on that. The other is there are other options out there, right? There are annuities that will give you double or triple the benefit for long-term care. There's life insurance policies that will allow you to take, a chunk of that benefit for long-term care. So Ruth, there are other options out there. Now, which option is best for you? I don't know. Unless we sit down together and kind of really look at where you are and how we can really focus your current circumstances to help protect you from that long-term care issue that could be looming down the road.
We have another question. Jeff from Lake Placid. I'm in a bit of a panic because my company is letting a lot of people go. That could be very scary. I've actually been through that working in radio all these years, so I can relate to this one. Retirement has been on my horizon for a year or two now, but I don't know what to do if I'm let go. So should I just bite the bullet and retire before they have the chance to let me go? He's trying to think ahead of the game, I guess.
So just off the top of my head, I would say that no, and unless they're going to offer you some kind of severance package, right? If there's a severance package involved, then maybe you have to weigh the pros and cons of the severance package to do that. But if you go ahead and retire, then you're saying, okay, I'm done. If you let them, quote unquote, let you go, then now you can apply for unemployment benefits. So, it may not be ideal. You may have to still be looking for work, but it may be an option to give you, 12, 16 weeks, something like that, of unemployment benefits. So that would be an option. But I would tell you, if you think that is a possibility, now's the time to start to put a plan in place for what could occur. You want to have some kind of retirement income plan in place, so you know where your 401k is going to go when you're no longer employed. If you have other investments, how am I going to use those to create that income that I'm going to need in retirement? These are all important things. And it sounds like, it's going to come kind of all of a sudden. So having a plan today, you may have to tweak it when it actually happens, but at least having the baseline now really gives you a head start to kind of put together that plan and know, here's the things I need to do if and when that happens.
These are some great questions that our listeners are coming up with, and also great answers from you, Philip. If anybody'd like to get a hold of Philip, you can text the word VISIT to 863-877-1188. That number again is 863-877-1188. Text the word VISIT. Go in for your complimentary visit with Philip Statler, president and founder of the Statler Financial Services. And you are listening to the Statler Financial Radio Show. We've got our mailbag questions. And Jamie from Sebring, I've got grandkids I adore, and I want to make sure they're able to have a great education. What are some ways I can contribute to their education without jeopardizing my retirement?
Great question. But here's, Stephanie, before I answer that, I just want to kind of lay a little bit of groundwork before I get to the question.
Of course.
It's easy to schedule some time with us, right? It's a phone call. You don't have to make the trip in. You don't have to be sitting at your house waiting for a video. It's you and I on the phone, really, that making sure that you've got everything lined up for retirement. It's that simple. And if you've got everything planned out just right, I'll tell you, hey, you've done a great job. Here's maybe one or two things I might tweak, but you're good to go. You don't need my help. Other folks, though, I'm going to look at your situation and say, look, you really need my help. And here's how we can help you. So please don't think that you have to do it on your own. I'm here to help. And it's simple. Like Stephanie said, it's a phone call, right? 863-877-1188 to get on our calendar. So I just wanted to lay that out. Sometimes people are afraid to pick up the phone and call. And so I just want to kind of hopefully relax people to know, hey, it's not a big deal. It's you and I on the phone having a conversation.
And you're an easy guy to talk to. So that does help.
Hey.
That does help. It really does.
So, all right, let's get to the question here. How can we help educate our grandchildren? You need to have your retirement plan set first, right? You need to have, hey, look, here's my strategy for retirement. Here's my income plan. Here's where I'm at. And then we can say, okay, what can we contribute to our grandchildren's education? And it may not be a lump sum at one time. It may be, hey, look, I got to make some contributions to a 529 plan. Or I might have to take a state funded, retirement plan, and maybe I have to pay it over a couple years to make it work. Those are all things that we can work through in the planning process. But the key part is the plan. You have to have a plan first before we can work through making those adjustments for our grandchildren. And so I would just say that it's possible. We just need a plan in place to make it happen. And that's the way with a lot of things, right? I want to take a big trip. Perfect. Let's make sure we have a plan in place.
That's right.
To fund that great trip. So it's doable. We just have to have all the circumstances and the framework to make sure it does happen.
Randy from Venus has a very important question for you. My wife and I have always wanted to run a small bed and breakfast after we retired. And now that we've got some time on our hands, we're really thinking about that bed and breakfast dream. But is it too dicey to get into the hospitality business these days because of things like inflation and stress? We're not quite ready to let go of this dream yet. So what do you think? What's some good advice for them, Philip?
You know, you want to think long and hard, right? About starting something like that. It sounds pretty cool, right? Maybe you got a working ranch or something that can be part of the B&B. That would be pretty cool, right? But the hospitality business is a tough business to be in. And so you got to really kind of weigh the pros and cons there. Not only just the inflation and the stress, but what does it do to your lifestyle, right? Now we may be captive to that property, having to be there on a regular basis, not being able to really take time off and enjoy our retirement. So I think that, like I said, you got to really weigh the pros and cons before you really jump into that. It might be fun and you might be able to say, okay, we'll do it for these certain weekends or weeks, but you need to understand what you're biting off, because it could be a big deal, Randy. And I'd hate to see you get stuck and not really be able to enjoy your retirement.
You want to talk a little bit about taxes, Philip, maybe how your tax appointments look like for folks who are listening?
Absolutely, because that is an area that we don't talk about much on the show. But we don't only do, have a financial planning practice, but we're also partners, me personally, partners in a tax firm called Heartland Tax and Accounting. So we actively are doing tax returns. So if you're out there and you need some help when it comes to taxes, or you're trying to figure out the new tax laws, how they can help you, would love to sit down with you with that and help walk you through those things. A lot of our investment clients are also our tax clients. So that makes it easy to really kind of combine those two things and do the planning that it needs for both those things, to make sure that, we're looking out for the taxes and the investment side at the same time. So that's always something good to look for. And it's easy. Give us a call, 863-877-1188. You can schedule your tax appointment. More importantly, though, I'd like to make sure that you have a retirement plan in place, that you have an income plan, that income plan that's going to get you from now through the rest of your life, knowing that you have enough income coming in. It's important. It's important to me to make sure that all the folks out there that I can encourage and help put together a plan so that they can retire with confidence. Give us a call to get started. Again, that number is 863-877-1188. 863-877-1188. I'd love to spend 30 minutes with you. Give us a call.
Thank you so much, Philip. We appreciate that. And join us next week again for the Statler Financial Radio Show.
Advisory services offered through Second Half Financial Partners, LLC, a SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. This radio show is a paid placement.